have a realtor client, we spend most of our time figuring out the strategies, implementing the strategies. That happens all year long. It's just a little bit of time in the, February, March, or April preparing their tax return. But by then we totally know what we're going to deduct. If we know the documentation, we have all that tuned up before we ever prepare the tax return. And that part where it's the implementing of the tax strategies, uh, hardly anybody knows how to do that. Most CPAs don't know how to do that. We've developed all these things over time about an efficient way to implement the tax strategies. So it is totally overwhelming. It was overwhelming for me the first time I implemented a tax plan. I had to spend lots and lots of hours, but now we have it in a real efficient process. We do it for, lots of realtors, and we do it over and over and over again.
Mm. For those who are not aware, could you explain what makes tax planning different from tax preparation?
Sure. Yeah. Tax planning is happens during the year, and it's implementing the strategies, and it's making a structural system that captures these deductions. So tax prep, that's just you send your information to the tax preparer and they put it on the tax form, and that's fine, but they aren't doing anything to make sure you would have had all the deductions that are available to you as a realtor, and they aren't doing anything different for you as a realtor than they are doing, for any other person that's just any other kind of business. So, or any other tax return, they're just taking the information you gave them and putting it on the tax return. So, yeah.
Okay. Uh, what are the top three tax saving moves realtors should make before December 31st?
Yeah, the top three moves are probably, well, first you need to hire a tax advisor to implement this stuff, because, you don't have like 10,000 hours to figure out how to do it yourself. Hire a tax advisor and they will determine what the strategies are that are best for you. But the ones that come up a lot of times are the entity choice. A lot of realtors should be S corporations. And I see a lot of realtors that are way overpaying their taxes because they have not made a S corporation election. There's a certain way you do that, and there's several steps that have to be done right. So that's the first thing. But I would hire a tax advisor to do it. The second thing is implement. So you get a draft and adopt and this thing called the accountable plan. And then you have to document the monthly expense reports on that. Again, it's a whole thing to document. I wouldn't try to do it yourself. Hire a tax advisor that's used to doing this documentation. And then the next thing is this Augusta rule. So schedule your 14 meetings that you can take tax free. It's a way to take tax free money out of your business. You document 14 meetings you had at your home. You do this every day as a realtor. We know you're talking about work at home all the time, but you need to document, specific meetings that you did. And there's certain things you need to document to make it deductible. And then you can have these 14 board meetings where you pay rent, or your company pays rent to you. And that's just a way to take tax-free money out of your business. So those are the three things that almost every realtor we do in the first year tax plan. And then there's lots of other things we do to save them more money, but usually that comes in like year 2 or 3 as we, get those low hanging fruit items done and then do the more complicated strategies.